Well, good afternoon. Good afternoon and welcome to another Webinar Wednesday hosted by CSU Bakersfield Small Business Development Center. This is webinar number 261 in our series now beginning its 11th year. So good afternoon, I'm Kelly Bearden. I'm going to be your host today. We've got a great special guest, a great program, a lot going on in the economics world, and economics affects small business, affects everybody's business. So a lot to go over. Let's get rolling. So what is happening today, the 1st of February? Well, our economy continues to dominate Webinar Wednesday. The economy has really been really active for a long while, and at least most of 2022. As our last economist that was on, Dr. Aaron Hedgay, once told me, it's great to be an economist right now. At least that's what I said. He replied, it's always great to be an economist. I think our guest today might share that same sentiment. But the economy is dominating, and we just heard news that the Fed raised the rate for the discount rate to 25 basis points, a quarter of a point increase. You can anticipate many of your loans that are variable by nature to go up basically a quarter of a point. Today also we're going to have our Capital Quarter segment to where we're going to promote a local pitch competition coming up, a little bit on the ERC and some other things that are happening. We are going to have our special guest today, and our special guest is Dr. Nyakundi Michieka. And he is a professor, assistant professor. He'll be here and he'll talk about Kern Economics and specifically the fine work they do with the Kern Economics Journal. So the latest information on that, business news that you need here in 2023 will be here on Webinar Wednesday. And as always, your questions and a poll. And today, I've been getting a lot of requests to go back to some of the more simple, whimsical type poll questions. And as you see, we're right here in the middle of our preview today, we use the word pronounced. So pronounced, not pronouns, pronounced. I've been told I should use pronouns, and by the volume of Ms. Kelly Bearden mail I get, I agree, or maybe I should, but today it's going to be on pronounced. We're going to get Dr. Michieka's name pronounced correctly, and moving into our poll, what better poll to have than to go whimsical and go pronounced? Lynyrd Skynyrd. The band Lynyrd Skynyrd, their first album was released 50 years ago. What classic song was that final track? Was it Freebird? Was it Whipping Post, or Hang On Loosely, or Green Grass and High Tides? All fabulous songs there, in my opinion. And what we're looking for is the classic Lynyrd Skynyrd song that was released 50 years ago, not today, but 50 years ago in 1972 on the pronounced Lynyrd Skynyrd album. So we do have 48% of you participating. We'll make a wild guess. You never know what might happen here. Going back 50 years, kind of dates, I know several members of our audience, including maybe our guest speaker, but we'll have to wait and see. So the first of 4 poll questions on the whimsical subject of Lynyrd Skynyrd, pronounced Lynyrd Skynyrd, is we have 65% of you in. The last track on their classic song, we're going to end the poll with 65% of you, and we're going to share the results, and we're going to learn that yes, absolutely, Freebird, 63% of you, the classic song Freebird. 63% of you, 21% were throwing that guess out there, I think, with the Whipping Post by the Allman Brothers Band. Hold On Loosely was actually a 38 special. And then lastly, the Outlaws, all fine Southern rock artists participating in poll question number 1. So we will now move on to poll question number 2. And since you've identified that Freebird was the first end of that classic song, let's find out how many YouTube hits or views they've had in the last 4 years. So the pronounced Lynyrd Skynyrd version of Freebird was uploaded to YouTube 4 years ago. How many views has it had? Is it 8 million, 20 million, 28 million, or 80 million? Those of you who have been around a little bit on Webinar Wednesday know how much we love the 80-20 rule and how it applies to about everything in life. So we have all 8s and 20s and 80s all used in this particular poll question. It is the YouTube views for the song Free Bird in just 4 years. 65% of you participating again. We're going to stop the poll, end it right now, and share the results with you. And yes, you are correct. A lot of Lynyrd Skynyrd fans out there, apparently. 43% of you, 80 million views for the song Free Bird on YouTube. So thank you for that. And we will move on to poll question number 3. And poll question number 3 is going to be a little bit of Lynyrd Skynyrd, not their pronounced album, but their final album that was released 3 days after their tragic plane crash. 3 days after the plane crash, that getting a little problem starting this particular poll. Let's try it again. So, and it doesn't want to work it again. So, well, you get by on poll question number 3 as we have a little bit of a glitch. But the question was, in what song was mentioned, or what town was mentioned in 1977 Street Survivors in the San Joaquin Valley? And that, of course, is Bakersfield, as a Merle Haggard song was covered on Lynyrd Skynyrd's last album. So problems there. Okay, and then our last question, and I will not even pull it up in the poll since it's not allowing me to enter it, was there were 3 female members of the Lynyrd Skynyrd band, female backup singers, and their name were the Honkettes. So there you go. There's our Lynyrd Skynyrd trivia. 50 years ago, pronounced Lynyrd Skynyrd. Having fun with the pronounce today as we move along. So our capital quarter, we're going to talk a little bit about things that are happening, our capital access that's out there for small business. We have a lot of different things as far as things going on. One thing is there is a power pitch competition, and the power pitch competition is going to be held at the Bakersfield Women's Business Conference that I believe is coming up in March or April. We'll have more information when we get there. But the important date for you to remember is on Friday, February 3rd is the last day for women-owned businesses and entrepreneurs headquartered here in Kern County to pitch for money, as you see here with our winners in 2021, won a total of $3,000, and that's the Mix Pro Beauty group led up by Leticia Velasquez. And so that is available right now. You'll want to go in, and we'll put the link in there. Everything's jumping around, but there's a pitch competition, but you need to enter by Friday to be ready. And again, that is going to be for actual businesses, women businesses located here in Kern County. So that's coming up. Also on our capital quarter, as we continue to find capital access for our local small businesses, the latest on the employer tax credit. So the last few weeks, you've seen me show emails that were actually sent trying to get to California State University, Bakersfield, and get them part of this credit. And a government entity really isn't part of that credit. So I'm glad to report, number one, that the email pursuit, the emails that I had received, 6, 7, 8 of them has ended. But the one thing that is kind of interesting on this now is nonprofits are applying and apparently are eligible. So again, this is a tax credit against federal taxes that are due, but yet it is a refundable one that you can receive the money up front in advance. And several nonprofits are telling me that they have applied and they are able to access a tax credit. Now, I find this whole conversation really intriguing because A tax credit is supposed to be a credit against income taxes that you pay, and nonprofits don't pay income tax. So, but they are receiving so we're going to let you know about it. So apparently there is a provision that allows nonprofits to receive that employer tax credit. So again, we recommend that you talk to your accountant. It's tax season now for everybody, even nonprofits. So talk to your tax professional, your advisor, and see if the ERC will work for you. And our last bit of capital quarter today is going to be the California Micro Grant Program in Kern County has suspended taking applications. There could be a window that opens it up for the $2,500 grant for micro businesses that earned less than $50,000 in 2019. And when I say earned, that is gross receipts or sales were less than $50,000. But right now they are going through the applications that they have. They have enough for about 400 of these grants, I believe 392 to be exact. And they're going to see if they have money left in order to do any more. But for now, that has ended. The Restaurant Revitalization Fund, that grant-funded program to the tune of about $30 billion, that actually funded less than 1/3 of the businesses that applied in the first day that it opened back in May of 2021. Well, now there's a tax credit in the works to benefit those that did not receive the credit. Restaurants continue to struggle. In my opinion, about 80% of them are still not at the levels that they were at 2019, or other factors of the economy, such as inflation, supply chain issues, labor cost, etc., have made it really difficult for restaurants. So if you did apply for the Restaurant Revitalization Fund and you were not funded, of which I believe nationwide, that totals about 160, 70,000 businesses. You can, if this is passed into law, which it hasn't yet, but there is still traction for that to happen. So the 175 who applied and did not receive the grant would be able to apply for this particular tax credit. And there's a few of the specifics that would happen if this tax credit goes into effect, into law, which it is not yet, but stay tuned and we will see what's going on. You know, you can review and you can go into our CSUB YouTube channel, and just here you'll find these fine economists from CSUB who have been on Webinar Wednesday in the past. And our fine guest today will be moving right to the very top of this list when we use it again. But you can go back and see Dr. Aaron Hedge, Dr. Mark Evans, Richard Ryan, and Dr. Richard Gearhart, who were on in earlier versions going back to over the past 18 months. A lot of different things, but with economics, it's usually your economic update you get on that day is most important, as it's going to be today. But go to our YouTube channel. We have most of our, or many of our webinars of our 261 on there, and you can find something that might interest you from the past. So notable news I'd like to share with you today is that the Fed met, and actually we saw that they increased the rates. Also happening today was the president and House Speaker were meeting to discuss the nearly $32 trillion debt ceiling. So that's going to become a political hotspot as far as the debt ceiling and how it affects small businesses is something that we're going to keep you in the know as we move forward. And something that I know our esteemed guest is going to talk about today are home prices. And it was reported today that they fell for the 5th consecutive month. And in 2023, if I put on my, my amateur hat for economics, which I intend to do, my freelance that I like to do as well, is that it's going to decline to its lowest level over a decade sometime in 2023. We'll see how that conflicts or agrees with what our professional has to say today. So we have several toolboxes. We'd love to add the Kern Economic Journal that we're going to hear from today, which is a publication of the School of Business and Public Administration. We need to add it to our toolbox eventually, even though it's not one of our SBDC tools. It is one that our SBDC clients and those of you that attend the webinar can have access to. But in there now is we have Live Plan, our interactive live business planning tool, and also SBDC Net, which is a national clearinghouse for demographic and all types of information and market research studies on particular businesses, particular industries, and a lot of great information that your SBDC advisor can order for you. We have our cash flow forecast. You know how much I like cash flow. We throw in our webinar Wednesday, since we'll be back on Wednesday, and our SBDC toolbox moves on. But also moving on today is our program and the reason we're all here. Really, let's be honest here. And so, Nyakundi Michieka, Dr. Michieka is an assistant professor in the Department of Economics at CSU Bakersfield. He also serves as the director for the Center for Economic Education and Research at CSUB. Primary research involves around energy, environmental economics, a lot of work that he has done, 30 different research publications, very active in the agriculture and energy. And I mean, we're talking Kern County, it's agriculture and energy. So in the right place at the right time. His current works look at the long and short-term effects of oil prices, Kern County's economy, its effect on some of the regulation that it's affecting with oil prices, the water energy nexus, which is always fascinating here in Kern County. It's always fascinating to drive around and see an oil derrick in the middle of a farm. Yes. Reports on economic trends in the Kern Economic Journal that we're going to hear from today. Nyakundi grew up in Kenya before coming to the United States, undergraduate degree, and then also he received a master's degree, and we call him a doctor. So he obviously received his PhD in natural resource, environmental economics from West Virginia University. I'm proud to call him my friend. Welcome, Dr. Michieka. Go ahead and take it away.
Well, thank you so much. Thank you so much, Kelly, for the invitation. Thank you so much for having me here. And what I will do before I get things rolling is I'm going to share my screen so that I can just kind of share my findings. Are you folks able to see my screen?
Absolutely.
Okay. All right. Again, thank you so much for having me here. Thank you also, viewers, for tuning in. We're so happy to have you, and it's always a good time when we get to share our findings with the community. And this presentation will pretty much talk about economics, and we'll talk about Kern County's economic performance. We'll also talk about the state's economic performance and the whole country's economic performance. Some of these findings are hot off the press. This is the current latest edition of the Kern Economic Journal. It's still warm from the printer. So we're going to have the privilege of talking about some of these findings here. So the first thing we'd like to do is we'd like to acknowledge journal sponsors. We work with the community. They do support this journal. Some of the work we do involves collecting data, working with folks, a few phone calls here and there. So we'd like to acknowledge the sponsors of the journal. So this is what I'll talk about today. First, I'll just give a quick overview of the national and state economy. Then I'm going to delve into Kern County and talk a little bit about the labor market, talk about unemployment, employment, some of the jobs that we've seen increases in. We'll also talk about the housing market. And I'm glad that in Kelly's presentation, he talked about, as one of the notable news, he talked about the housing market. Very interesting industry to be in, a lot to see. And then we'll talk a bit about the stock market. And here it'll be focusing on some of the companies that we track here in Kern County and how they're doing in the stock market. Quick word on inflation. I see that Jerome Powell is still having a press conference. And then we'll talk a little bit about commodity prices. And then I'll talk about two featured articles that always appear on the journal. And they're usually contributions from academics and faculty from the department who want to share some of the interesting topics on economics that they feel that the public should know about. So this, now what we report in this journal is quarterly data. It's not monthly data, it's quarterly. So this stuff that we're going to talk about here is data from the third quarter of the year 2022. So last year, third quarter, and we're still collecting fourth quarter data. This stuff Fourth quarter data usually comes out December, January. So as of yesterday, we had most of the latest data. So in about a month, we'll be putting out our fourth quarter 2022 data. So overall, US GDP increased at an annual rate of 3.2%. It's still increasing despite the inflation that is taking place. In terms of personal saving, and remember, here we're looking at the whole country. Personal saving, actually, before I talk about personal savings, personal income decreased, right? The personal income, disposable income, the money that we have to spend went down. Also, the amount of money that we save also went down, okay? So we're digging into our savings and we have less money to spend. And then the University of Michigan's Consumer Sentiment Index, which just measures consumer optimism, how optimistic we are on the economy, that index or that number reduced in the third quarter of 2022. Let's delve into now California. California's unemployment rate was about 3.9% in the third quarter, but if we were to look at Kern counties, it was 6.5%. But our unemployment rate dropped, okay? So it dropped, so we have a drop, and in California, we saw an increase in unemployment rate. So those are some of the numbers. In terms of the state economy, the labor force, or the number of people that are willing and able to work, went up, went to 19 million. Remember here, we're talking about California. Total employment also went up and unemployment rate went up, right? So the number that we're seeing right here is pretty much the same number that we saw in the previous slide, this slide right here. So that's the state economy. Let's now delve into Kern County and see what's been going on in the third quarter of 2022. So there'll be a lot of graphs. There'll be quite some numbers. There'll be a lot. It's like going to a buffet and you have a lot of options to pick from, but I'm sure some of us will have a few things that are of interest to them. So what we typically do is we present all this material, and then hopefully you'll pick whatever works for you. So in short, in terms of jobs, the labor force went up. So we have more people who are able to work in Kern County. The number of folks who got employed also went up by about 5,000, and the unemployment rate reduced by 1,000 individuals. The mining and logging employees, or the folks who are working in the oil industry, that number did not change from quarter to quarter. It did not change last quarter. And the manufacturing, we had about 33 more people working. And the health services, we saw a decrease in the number of health workers by about 200, okay? Now, this number also changes with time, but that was the only decrease in employment that we saw. Now, this is a list that has been compressed. There's much, much more data that I have not presented here, but this is kind of an overview of what's going on in terms of jobs. So this here now, in terms of our labor force, we said our labor force went up. The reason why I showed you this now, in the previous slide, I said our labor force went up, but what does that mean in relation to where we're coming from? So that's what the next few graphs are going to be all about. If you look at our labor force, it went up. And these numbers that we have here are quite similar to what we had in 2021 third quarter. And with the journal, we give a little bit more information. And these numbers are now back to slightly higher than pre-pandemic levels, okay? So we know that the pandemic had an effect on the labor force. And some of these shocks saw a decrease in the number of people who are in the labor force. But, a lot of economists are now asking, are we back to where we were pre-pandemic levels? So with some of these metrics, we are getting back to where we were and going up. Unemployment has also been going down. You can see the number of people who do not have jobs has also been going. There's a steady decline. You can see that this is happening, which is a good thing. And then in terms of unemployment rate, this slide here, if you look at Kern County, there are 11 cities, I think 11 cities in the county, and they're all, we all have a measure of unemployment rate that's in each city. So what we have here is the overall unemployment rate in Kern County, and then we have some of the big cities that we have out here. So in Bakersfield City, for example, the unemployment rate was 3.2%. And Arvin, you can see it was about 4.66. Delano's numbers usually change, they shift a lot, okay? So when we usually look at numbers, Delano usually has a much higher unemployment rate compared to the other cities. But you'll see that, some of these numbers are quite, for example, Taft, quite low. Tehachapi is about 5.2%, and in Lamont, it's 3.92%. It's also interesting to take these cities and put them on a map and see where they fall on the graph and whether there's a pattern as to where we have high unemployment rates. And this does exactly that. So what we have is the whole Kern County here. Bakersfield is right at the center, and you can see where each city sort of is. But you'll notice that the cities on the northern part of Kern County tend to have a slightly higher unemployment rate than the ones down at the bottom here. Number of reasons for that. One, the industries that are up at the top here are different. You have the agricultural sector. You may have, out here you have the aerospace industry, so that affects what's going on, and that's why you see the unemployment rate in this region is quite low. And you also have proximity to LA, which can change some of the numbers that we have here. But all in all, it's quite interesting to see what's going on here. And also, when I talked about farming, there's also seasonality in employment. So it's also important to have that in discussion when talking about some of these numbers. Our wages and salaries have also, they took a little dip in the first quarter of 2022, but they have actually been going up over time. And let's now talk about housing, okay, one of my favorite topics. So if you look at the median home prices, I like to show this. These are the median home prices in Kern County and the median home prices in surrounding counties right around us. And you'll notice that our median home prices are about 365,000. That's the median, right? Median in the middle, right? But if you look at the other counties, for example, San Luis Obispo, some of these prices are quite much higher. And this makes it actually affordable, which is why we see a lot of affordability in terms of living here. And one of the things that gives us an edge over attracting talent is the lower housing prices. Kings and Tulare counties' home values are also lower than Kern County. But another thing that we tend to look at is what I call the spread, which is taking an average of the home values of the surrounding counties, and then averaging that, and then taking the home values for Kern County and saying, okay, let's see what the gap is. So if the gap is really, really high, it means it's much more expensive to live, for example, in Ventura or Santa Barbara or LA, and it's cheaper in Bakersfield, right, or Kern County. So the higher the gap, the better for us, okay? So that spread, which is what I call here, it just shows that the gap has actually been increasing, which means it's getting cheaper. It's actually relatively cheaper to live in Kern County relative to the neighbors, okay? So relative, the word here is relative. If the gap gets smaller, then it means that, it's, what you're paying here is close to what you're paying in neighboring counties, which is not, for us in terms of competitiveness, it's not the best thing. The median home price in Bakersfield, again, this is quarterly data, right? So as Kelly talked about the monthly level data, you'll see that the home prices have been going down monthly. When we talk about quarterly, we're talking about lumping 3 months, 3 months, 3 months, 3 months. January, February, March, April, May, June, July, August, September, October, November, like that, three months. So the home prices dropped in Bakersfield. And if you were to look at the median home prices in Bakersfield and compare them with some of these larger cities here, you'll find that in Bakersfield, the home prices went down. Same thing happened in Delano, and a similar thing happened in Rosamond. But that's not the case with the whole city, right? I mean, with the whole state. In California City and Taft, and here you have Tehachapi, you see that there's an increase in some of these median home prices, okay, median. And what this graph is just showing, it's showing you over time whether prices have been going up. So for example, you can see that they went up, and then they dropped, okay? Here they kind of went up and leveled off, but they're still going up in that direction. If you were to look at the annual change, year-to-year change in terms of home prices, you'll find that in Bakersfield, the prices went up about 9.66%. In California City and Delano, we see a large increase in home values, but then they dropped in Taft, okay? Remember, this is 2021 to 2022, okay? We're now in 2023, so the numbers will start coming out as we get there, but this is a little bit of what we're seeing. So these are annual price changes. In terms of sales also went down a little bit in Bakersfield, okay? So the number of houses that we've sold, and also the Kern Economic Journal also tracks these numbers from the National Association of Realtors and the California Association of Realtors, and puts out statistics on how we're doing in relation, for example, to California, or how Kern County is doing in relation to the other 58 counties in the state. This number here is very interesting. Building permits are the number of permits that are applied by builders for new homes, and it could be new offices and all that. And the US Census Bureau tracks this number at the city level. So what this number does, or what this number illustrates, it's usually a very good pulse on how the economy is doing. A lot of economic indices are based off of this, because from the number of new permits, you can tell whether, there's interest in building, there's demand. You have a lot more people who want to now buy homes and make those long-term decisions. So the number of permits in Kern County has actually declined, okay? And when I was looking at the data from the Census Bureau, it showed about, I think 95. This is the monthly level data. We saw it was a very, very small number. So the number of permits that have been applied for by builders has actually dropped to a very, very low level in the last 10 years. So that just means that there's, for example, if this trend is to continue, then we'll probably see a less number of new homes being constructed. And that could also lead to a lot of shocks in the system, because you could have less supply, and that could affect demand over time. And of course, some of these numbers could change, but it's quite interesting to note that the number of building permits has actually reduced. The mortgage loan interest rate has been increasing steadily. This is something that we've talked about. This is quite out there. And then one other thing we decided to do over time was to look at the stock market. And the data that we've collected here is we have about, okay, so I'll do this slide first, and then I'll go to the other slide. So we collect data on stock prices for about 8 to 10 companies here in Kern County and record those numbers in the Kern Economic Journal. And what we've noticed is, for example, for Chevron, you'll see that Tejon Ranch, some of the stock prices have actually been going down. And there's much more data that I have not put out here, but there's much more data that can tell us what's going on. So if you have to take this average and come up with an index, you'll find that on average, the stock market or the stock prices for local companies has actually declined over time, okay? There's a lot of discussion on this. In other words, we can have a lot more talk on this topic, but this is something that we're just tracking over time, and these numbers have been changing as time progresses. Commodity prices. Some of the other things that we like to track within the Kern Economic Journal is, for example, the price of gasoline in Bakersfield. Now, this number, of course, is quite, it's usually an average, okay? So if I was to draw a month-to-month or a graph that shows the daily prices, that this graph would be a little bit more, you'd see a little bit more shocks in what we have here. But here we just pick averages. And it's also important to know that here we're talking about gasoline prices and not crude oil prices. Crude oil prices right now are about $76, okay? But here, this is the price that you'd pay for gas on average here in Bakersfield. So the number between the second quarter and the third quarter went up by just a little bit. And these numbers, of course, I think the fourth quarter numbers are going to show a little bit of a change, because here we're seeing sort of a plateau, but we probably will see prices perhaps maybe change in upward trajectory. But I'll have to confirm that before I make that statement with confidence. Price of milk. We also like to track the price of milk in California. And this is, we also have a section where we talk about, or we look at how farmers are doing or how the agricultural industry is doing. And one of the things that we do is look at the price of milk, and that also declined by just a little bit. And in terms of farming, the number of employees in farming has also increased. And this is very seasonal. Again, it follows planting patterns or harvesting patterns or whatever crop you're dealing with. But this number has actually gone up between the second quarter and the third quarter. And here we are talking about, on average, Kern County has about 70,000 individuals at least recorded who work in the farm or agricultural sector. Now, if we were to really think about how the ag sector is doing, we can also ask one or two questions. We can ask how well or how are these sectors doing in terms of the price or the amount of money they receive for the commodities they sell. Or we can also ask another question and say, well, is it expensive to be a farmer right around now? Which is why we present this here. This is the index of farm prices received. And this just says that farmers are getting a little bit less for what they're actually producing, okay? And that, again, kind of illustrates what's going on in the economy with the inflation and the high interest rates. And, people are now saving and changing their spending patterns. So the index of farm prices received has dropped a little bit. And what the farmers are actually paying, this index here tracks if you were a farmer, how much would you be paying for your fertilizer, for your employees, for your labor costs and water and all that stuff. So it's just the cost of doing business as a farmer. So this number has also increased for farmers, and we can see that at the end, even farmers are also, paying a little bit higher price for some of the commodities that they're purchasing and that they are producing, which is what we recorded. So in terms of summary, farm employment increased by about 10,000. Okay, and the index of farm prices got less money on average, and they paid more for their products. And compared to the 2022 second quarter, farmers were worse off. Okay, I should put quote unquote there, but worse off using some of these metrics, which is what we can say about farming. I have talked about a lot of things, and what I tend to do is to sometimes have a summary slide. But before I get to that summary slide, we usually have 2 featured articles with each edition of the journal that comes out. These 2 articles touch on very interesting topics. So in this particular edition that came out, we have Professor Mark Evans, who was one of the speakers in this awesome webinar, who talked about inflation. So he does a really, really good job of introducing the whole concept of what inflation is. And he decomposes inflation into its components in that short article. Short article, about 500, 600, 700 words. He decomposes inflation into its components. He describes the policies for each component, or the monetary policies for each component, then provides an early update as to what's happening early this year, and then describes a soft landing pathway to disinflation. Very great article. Second article, again, which is fantastic, was put out by Professor Kelsey from the Department of Public Policy and Administration, PPA, and his article talks about how leadership, or he provides insights on how leaders in organizations should make better decisions. So much of that article, we talk about some of the, very, very good strategies that leaders could implement in small businesses to make better decisions over time. So we'd like to thank these 2 contributors because they actually add something of interest for us to read, apart from looking at the graphs and tables and the numbers that we have. So let's summarize this whole thing. I know I gave you a lot of information and I call it like a buffet of stuff, but some of the takeaways here, and we'll go from the national economy to California, and then we'll talk a little bit about the local economy. US GDP here actually should be increased. This number here, I made a mistake, it should be increased. It increased. The rate at which it went up, right, is not the rate at which it went up in 2021, okay? So if you look at what happened in 2022 third quarter, it's not the rate at which it went up in 2021 third quarter. So the rate at which it increased was lower, which is why the word decreased here, but that's a little bit confusing. So bottom line, GDP increased, okay? US population have less money to spend because we say the disposable income went down. The amount of savings also decreased. A lot of us are now digging deeper into our savings, and also consumer confidence decreased, okay? These are just takeaways from the national economy. In California, the labor force increased. And if we were to look at the local economy, we saw an increase in the labor force. We saw a lot more people get, a lot of people get more jobs. We saw the labor force also increase. The numbers on average are back to pre-pandemic levels. So the structural break that I talked about, or the structural shock that I talked about, if things were going like this and they went down, they're back to where they were if you're to draw a straight line and kind of just bypass the pandemic. Median home prices dropped in Bakersfield, Delano, and Rosamond, but they increased in Tehachapi. And then we also saw a reduction in permits uptake. So quite interesting. And then stock prices also reduced for most companies in Bakersfield. So that kind of brings me to the end of the presentation here. And one thing I would like to say is I would like to thank the sponsors again. If you're interested in subscribing to the journal, please feel free to reach out to me. What we do is we print out copies of this journal and we mail it out to our sponsors, and you get a number of copies that you are interested in, and we track the economy every 3 months. So as we speak, we're now looking at what happened in the fourth quarter of 2022. So some of those numbers usually come out in December and January. So as of today, we'll be kind of updating some of that material, and we'll probably have some articles on what's going on with the eggs. Okay, we have some contributors from the ag industry who talk about why the price of eggs has gone up. And then I think the other article, I'm not going to say too much about it because it's still in the works, but this is something we'll do. So feel free to reach out to us. I have my email right there, and I also have a link to the Center for Economic Education and Research, which usually puts out the Kern Economic Journal and some of the cool things that we're working on here. We have a research center. We are working with students. We have some students who are conducting research on ag and water-related issues and energy, a little bit on some of the tax data, and feel free to reach out on the website and via email. And that, ladies and gentlemen, hopefully brings me to the end of my presentation. Thank you so much.
Well, fantastic stuff there, Dr. Michieka. And a lot of information to go through, a lot of discussion points that we have to come out of this. And so now I get to see how bold you want to be on your predictions here.
Okay.
So, yeah, okay. I like that. That was a vote of confidence for me.
Yes, let's go. Yeah.
Okay, so we talked a lot about housing. And when you had your one graph up that showed housing over the past 20 years or so, we saw obviously the housing crunch and the financial market meltdowns that lasted from 2007 to 2008 or 9. And then we saw just a huge reversal in housing. We saw a housing market crash. Are you seeing that potentially happen again, or are you seeing somewhat of a more softer approach to housing prices?
So what happened in the 2007 to 2009 housing crash was quite different than what's happening right now. What caused prices to drop in that period is different from what's causing prices to drop right around now. And I think, right now, folks are typically making decisions based off of what's going on with, for example, there's inflation and some of the long-term decisions that we need to make. So I do not see the prices drop down too much. I do not see a crash, quote unquote. Of course, things can change. With the economy, I like to say we can only talk about what's happening today because tomorrow things will be different. I think with, for example, the Ukraine war, it affected so many sectors. We saw changes in natural gas supply. We saw, quite a lot of work going around. Quite a lot of things happening due to some, an externally driven shock. But to make a long story short, I don't see the crash being as severe as it were in the previous 2007, 2009.
So some of the factors in housing, before we leave housing, if you have any questions, go to the Q&A and definitely put some questions in there. We will check the questions. We will check the chat. But definitely some of the things driving housing costs have been new housing production, new housing starts. I believe in some of your statistics, the permitting process, I think that was down. Do you see that continuing, and is that mostly driven by higher interest rates?
Good question. So higher interest rates is one reason, but I think there's also an increase in the supply of homes out there in the market. So we do have an increase in inventory. I think the folks in the real estate market would probably be on the front line and can tell us more on what's going on. But there's a large inventory, and also the prices of homes has been quite high. I think we're still seeing some of those high prices that folks paid for in the pandemic, but the higher prices, low supply, higher interest rates, and then also here we're talking about consumer optimism. All those factors have affected the permit uptake and the demand for building new homes. So that has been an issue. And again, of course, there's also the talk on the cost of raw materials. And these, again, are driven by oil prices, and oil prices also had an impact on a lot of the prices of the goods that we're paying for. So that also can also be lumped into one of the issues driving the decrease in demand for homes from consumers.
Great.
Yeah.
Okay, let's move over to here's a question about unemployment figures.
Okay.
And the question is why is Delano such an outlier for unemployment numbers? I remember, if I recall, the numbers were close to 12% unemployment for Delano.
Yes, so I like that question. So the thing about the unemployment numbers, they vary by region because of one, the industries that you have out there. So if you have large farming communities, we tend to see a lot of shocks, which tend to follow what's going on in the ag industry. Other industries, for example, I think I talked about Ridgecrest is quite close to, it's quite close to San Bernardino, LA area, that eastern part of Kern County, and you don't tend to see much happening there. So the industries usually drive a lot of those shocks, quote unquote, and it's just expected. Sometimes we see a big swing in this direction, and we see a swing in the other direction. And also when we talk about farming, for example, the data for farm employment is typically is reliable, but it could be more reliable because you may have some workers or some employment statistics which are a little bit skewed because you're not able to collect all the data because of the nature of employees. So very, very good industry, but with Delano we usually expect a little bit of that. And some of the areas like Bakersfield here, we have a vibrant, for example, the health and the service industry here is quite susceptible to changes, especially when we get to the holiday season. We see swings in employment in the service sector in Bakersfield, for example. So restaurant employees, trucking and wholesale distribution and retail numbers usually change significantly, especially during the holiday season. So to make a long story short, all these are industry-related swings.
Unemployment, we mentioned last week, there was an article out, a study that showed that since the beginning of the pandemic in 2020, that essentially all net jobs had been created by small business, by businesses that had 250 fewer employees. So essentially 3.75 million jobs were created. And whereas basically they were at net zero for larger companies. And now that we're seeing layoffs that are mostly coming in the tech sector and larger businesses, and small businesses still want to hire, do you see this trend continuing? And how do you think that will affect growth based on the current Fed wanting to continually increase interest rates?
Every time I talk about small businesses in class, for example, they do a lot. They hire the most employees in the country. Small businesses are usually responsible for hiring a lot of individuals. And over time, I think while the big companies sometimes, when they have layoffs, we hear much about what's actually going on with them. We don't tend to hear much about what's going on in the small business. So the article that you talked about was a true reflection of what's actually going on with small businesses. So the rate hikes might impact the small businesses, but I don't see that effect being as significant as what's happening in the tech world, because the tech world, they're just changing. A lot of these folks, from what I've read, are folks who were employed during the COVID period, there was expansion, and I think they're now reevaluating some of the decisions they made. I see a question here that talks about the effect of China.
Yes, read that question and answer it, please.
There's a question here. It says, do you think about the infection of 1 billion last 2 months? So one thing about China is the effect of China is very interesting, is very important for what's going on in the economy. If China were to open up its borders and get back to where it were, we would see a very significant increase, for example, in the demand for products, in the demand for oil, world oil. Because remember, with the lockdown, you have a large demand and a large group of folks who have a large purchasing power, and they are not able to purchase as much. So the demand for oil, for example, energy products, I'll just give one example, energy products from China reduced, and that affected the prices. But now we're going to see an increase, especially if they were to open their borders and get back to the usual. We'll see an increase in demand, and that could also affect the prices that we pay for gas at the pump. So we're going to see something happening real soon with regards to China and opening up. So yes, and with the oil prices, oil prices affect products, they affect building supplies, they affect a lot of the stuff we buy, pretty much almost everything. And if that happens again, we could see an increase in prices that could again affect the interest rates. So hopefully I'm able to answer what Tenzin asked in the chat.
So China slowdown, being the second largest global economy, has a measurable effect on everybody else's economy.
Absolutely, especially through the energy channel, because if all of a sudden now this, they increase the demand for oil, then now it's like we have a new person who's now digging into all the oil that the global supply of oil. So that's pretty good. I see Kenneth Belcher here said he used to judge the economy by the price of a 16-ounce can of beer. Interesting, Kenneth. Awesome.
Yeah, that is an interesting analysis. A 16-ounce can of beer. One other thing that's going on is a lot of discussion right now. A lot of discussion going on interest rates and how far the Fed's going to go. So they have announced a 0.25% raise, and they are mentioning that they are looking at doing another increase in the next month or so. So as we continue to raise prices and raise the cost of interest and of money to try to slow down growth, do you see that continuing and being a trend through 2023? I know the goal is to get, basically interest rate down or inflation rate down to 2%. So where do you see interest rates headed, and where do you see some other key components of the economy headed, Dr. Michieka?
Great. So I think the main objective of raising interest rates, as you say, they were trying to slow inflation, and there has been, I think the Fed has also, I don't want to say achieved what they wanted to, but they've slowed down a little bit inflation, and in terms of the rate at which they will the rate at which they will hike the interest rate, it would be as high as we've been seeing in the past. So going forward, I don't want to say they've achieved, but they're on the path to achieving what they've been trying to do. So they don't want to I think if I was to serve on the FOMC, I don't think I would also want to overachieve that, because that would have a negative effect on the economy. So if it may happen, it probably would be as big a hike as we've seen in the past. But I think 2023 is going to be an interesting year, especially, right now, gas prices are high. We've seen, gas price and natural gas prices too are high, but this is very early in the year. This is January, February. Consumer spending and consumer optimism is possibly going to change in the next coming few months. The summer is going to be here before we know it, and that usually changes how folks spend money. So it's still quite interesting to see what will happen, but it's a good field to be in. Economics is.
Okay, last question. Recession in 2023 or not, and if so, when?
In my opinion, I would say I do not. I don't want to say right off the bat it's recession. I don't think it's gonna happen. Might be wrong tomorrow, but that's just what my thoughts are. But the fact that we're talking more and more about it, it's something that is in our minds. We're all like, is it coming? Is it happening? But I don't really see one happening. It's probably just we're gonna probably slowly get there, but not really get there.
Well, you heard it here first. Dr. Michieka says a soft landing coming out of this mess. Okay, let's hit the chat and see what is in there. Maybe there's another question in here, maybe not. There's some conversation on the employee retention tax credit. And yes, thank you, Tenzin. Also mentioned something we mentioned in many of our past webinars is that one reason why we really want you to go to your professional, your tax person, your accountant or whatever, is because these tax credits go back to 2021, you're going to have to file amended returns, both in payroll taxes and most likely in income taxes too. So there's a lot of other things that have to happen in this. And really the only person who is going to know that in your situation is going to be your CPA, your tax advisor, your tax professional. So that is the person to go to and to talk to about this. We do get a lot of people saying that they are charging 10 to 30%, 20% or more for a lot of the services they provide, which it really isn't much. And really, if you have a large dollar amount of return, a big credit due back to you, it's even a higher fee that you will be paying rather than, say, a smaller one. So what you do want to definitely do is to go back and check with your tax professional during tax season and find out if it applies for you and the best way that you can do that moving forward. So, okay. So that brings us to the end of today's presentation. So thank you so much, Dr. Michieka. It's great to have you here. Always value your comments and your friendships, Nyakundi, and great to have you here. Look forward to seeing you again sometime soon, I hope. And we'll be back next week with number 262. Our special guest will be on the small business innovation research grants, Mr. Charles Eason. So for Dr. Michieka, Kelly Bearden saying, everybody have a great week. We'll see you next week. Thank you for tuning in. Goodbye, everybody.